While a lot of India's major real estate markets are kind of plateauing, Ahmedabad is doing the exact opposite. It's hitting the accelerator. So, what's fueling this incredible upward momentum? Well, it's this unique synergy, right? A perfect storm of huge infrastructure projects, a massive influx of corporate talent, and a very real affordability advantage that's completely rewriting the city's investment map. So, let's unpack the numbers and see what's really going on. Okay, so first things first, let's just wrap our heads around the sheer scale we're talking about here. The market has an estimated primary sales value of a whopping 67,000 crore rupees. Now, that's about 8% of India's total primary housing sales, which is huge. But the number that really matters, the one you need to focus on, is the trajectory. A sustained 8.4% year-over-year growth. This isn't just some temporary spike. This is a deep structural shift. And this brings us to Ahmedabad's secret weapon, what we're calling its affordability advantage. See, while other Tier 1 cities are seeing their super high-end markets cool off, Ahmedabad's sweet spot for really fast sales is right in this 1.5 to 2.5 crore bracket. We're talking about top-of-the-line, grade-A inventory in this segment just flying off the shelves. It's getting absorbed within like 6 months of launch. This is that rare sweet spot where you get both massive transaction volume and significant value. So what's the big idea here? What's the core investment thesis for 2026? It all comes down to this powerful synergy from the macro level down to the micro. Think of it like this. These massive transit projects, they're the first domino. They attract the big corporations and global capability centers, and that in turn sparks demand for premium housing, all clustered in a tight 2 to 5 kilometer radius. It's a really predictable and incredibly potent cycle. So let's break down exactly how this is happening. We'll start by looking at the specific infrastructure catalysts, because they're really the engines driving this whole transformation. The undisputed game changer, no question, is Metro Phase 2. It's not just a transport line. It's a new economic artery for the city. It connects the administrative capital in Gandhinagar to Ahmedabad's commercial core in less than 30 minutes. And the effect is measurable. We're seeing a quantifiable 15% capital appreciation premium for properties just within a kilometer of its stations. And it's not just the metro, right? Look at the SG Highway. It's completely evolved from a simple bypass into the city's de facto secondary business district. I mean, it captures a massive 66% of all commercial leasing. This commercial gravity has a direct pull on residential prices and how fast properties sell all along the city's western corridor. And here's where the industrial piece of the puzzle fits in so perfectly. The NE-8 Expressway is basically a high-tech corridor. It's linking Ahmedabad's core to two gigantic industrial anchors, the semiconductor base in Dholera and the pharma SEZ in Sanand. This integration pretty much guarantees a 12% to 18% price floor for any real estate in the nearby micromarkets. Okay, so we've got these massive infrastructure corridors. Now, let's get out the map and see how their impact translates on the ground. Let's pinpoint exactly where these high-velocity investment zones for 2026 are popping up. Think of this heat map as our master key for the rest of this analysis. It breaks the city down into 3 really distinct impact zones. Up north, in green, you've got the institutional anchor, driven by Gift City. Then, in blue, there's the western commercial corridor, anchored by the SG Highway. And finally, down in the southwest, you see the orange high-rise frontier of Sheila and South Bhopal. All right, with the map laid out, it's time to get into the ground truth for each of these zones. Let's look at the actual project-level data that really tells the story of this growth. So up in that northern corridor, the whole story is about one word: institutionalization. The demand here isn't just from local wealth. No, it's being supercharged by this huge ongoing influx of global corporate talent moving into hubs like Gift City and the Million Minds IT SEZ. And these professionals, they demand one thing: grade A living. And here's what happens when that kind of demand hits the market. You get what we're calling a spillover surge. We're seeing an immediate 22% price premium in the areas right around Gift City compared to the city average. Base rates are climbing aggressively, and you've got premium projects like Soba Alicia already quoting prices over 20,000 rupees per square foot. Now, shifting over to the Western Corridor, the SG Highway and Ambly area has really cultivated this unique ecosystem for the city's C-suite and business elite. This is the absolute heart of the ultra-luxury segment. And look at the projections. Prices are expected to climb from a base of around 8,500 in 2024, all the way up to 11,500 rupees per square foot by 2028. Okay, now let's head down to the southwest. This is the high-rise frontier. Sheila and South Bhopal are where you see all this rapid vertical growth. And the numbers here are really compelling. You've got projects targeting the super spacious luxury buyer, but look at HN Riviera Bliss in South Bhopal, a staggering 18.29% year-over-year appreciation. That's driven by amazing ring road access and really strong brand equity. But if you want to talk about pure speed, how fast things are actually selling, you have to look northwest to the Jagatpur Gota tech access. This is where inventory moves the fastest, especially in that 1.1 to 1.6 crore price range. And that rapid absorption is being fueled directly by the IT professional demographic and their trust in top-tier brands like Adani. And this slide, wow, this just ties it all together beautifully. The rental yield matrix shows you the direct financial return on being close to these corporate hubs. Just look at that top row. Micro markets right next to Gift City are commanding rental yields up to 6.5%. That is significantly higher than other commercial hubs, and frankly, it's the best you're going to find in the entire city. So after digging through all this data, what's the final call? What's the actionable verdict for an investor looking at the 2026 cycle? But hold on. Before we get to the final verdict, any credible analysis has to acknowledge the red flags, right? There are real frictions here. In some of the outer zones like Shala, the vertical growth is actually outpacing the municipal utilities. The SG Highway, for all its commercial might, has serious traffic bottlenecks, and a 27% jump in unsold luxury stock, well, that signals a potential oversupply risk that you just can't ignore. Okay, so with all of that in mind, here is the final data-backed verdict. The Gift City Periphery and that Northwest Tech Corridor, fueled by corporate jobs and new infrastructure, are clearly aggressive buys. Meanwhile, an established premium zone like Ambly, where prices are already pretty mature, that stands as a value hold for long-term capital preservation and solid gains. So, when you boil it all down, the key takeaway is this. The 2026 cycle is going to ruthlessly reward investors who align their capital with those top-tier institutional-grade developers. They're the ones who can actually execute on these complex projects and pioneer Ahmedabad's transition into a real global financial hub. All right, so the chessboard is set. We've seen how infrastructure is the catalyst and that corporate influx is the fuel. So the question for every investor watching is, based on this data, which of these dynamic micromarkets do you believe is best positioned to capture that next decisive wave of institutional capital?